Hi all and welcome to another edition of our weekly market outlook report for the week starting Monday the 17th of February. We have a quieter week ahead of us, which starts with US market holiday for President's Day and slow economic calendar on Monday. On Tuesday, we should be on the lookout for UK unemployment rate, Eurozone ZEW economic sentiment and Japan trade balance data. Going forward, UK consumer price index figures and US housing data will be closely watched on Wednesday. On Thursday, the main point of interest is reserved for UK retail sales figures. Also, US jobless claims data and crude oil inventories will be released a day later than normal. The week will finish on Friday with Eurozone, UK and US manufacturing PMI figures. Now, let's take a look at a few markets. This is the intraday 4-hourly time frame price chart for euro-dollar currency pair, which is downtrending quite nicely. And recently we had a severe sell-off and a push lower. Current upside resistance is at 1.0850, 1.09 area. So basically, if we see an oversold bounce back, that will be the initial resistance. Only the breakouts above that level and a retest of that level from above could potentially create an additional move higher and a retest of additional upside resistances towards 1.10, which was that cluster of the previous two lows and then subsequent low around 28th and 29th of January. For another leg lower, which will be kind of a bearish continuation of this fairly embedded downtrend. The other alternative is if we don't see an oversold bounce back, if we see the loss of these current lows and a gradual move lower, then additional downside supports, which will be based on weekly and monthly previous swing lows and pivots, would be at 1.0780, 1.0750, possibly even 1.07 because it's a nice and round number. Alternatively, if we see a spike higher and for whichever reason, if we see a breakout and end of day close above 1.10, that would negate the bearish outlook, potentially opening the way for an extension to the upside and rally towards 1.1044, 1.11, 1.1140 on the upside. But the current prevailing trend is to the downside. Cable sterling dollar, the price action is coiling here, and we saw the loss of this support area, and now we are retesting that level from underneath. X marks the spot. We have a falling resistance trend line, and we also have a previous rising support trend line, which is now our resistance, pointing to a key trading level at 1.3080, okay, it's a zone, 1.3090, so it's about 10 point there. As long as that level of resistance holds and we see a subsequent move lower or an extension to the downside, bears would be in control, potentially targeting 1.2985, 1.29. Loss of that level could open the way for a deeper retracement towards 1.2786 support. Alternatively, if we see a spike higher and end of day close above 1.31 and retest of that level from above, that would change the outlook to bullish, potentially opening the way for an extension to the upside, targeting initially 1.32, which is the signified by this swing high here and also this swing high here. Breakout above 132 could potentially target 132.85 resistance on the upside. Dollar Japanese yen is consolidating, is going sideways in daily time frame, longer term time frames. It's uptrending, but the key area of interest is at 109.50, and we can see that we are seeing a bit of a consolidation here with this a sideways price action from the intraday point of view, with 1-2 touches at the top and a couple of touches at the bottom. The current price action is range trading. If we see a spike higher and a breakout above 110, a retest of that level from above as a newly found support could open the way for an extension to the upside, targeting 110.30, 110.50. Above that, 111 will come in play as a logical upside resistance. Alternatively, if you see a dip lower and the retest of that current support around 109.50, rejection and a loss of that level, that would change the outlook, potentially indicating a deeper corrective move to the downside, targeting 109, 108.65, 108.40, possibly even 107.70. Gold is also consolidating, the energy is building up. We have a significant touch here, second significant touch here. We are coming to a retest, the third touch of this resistance trend line. Bulls would require a breakout and end of day close above 1590, a retest of that level from above as a newly found support, for a potential extension to the upside, targeting 1600, nice and round number, 1611, 1614. Alternatively, if you see a rejection at this area and a gradual move lower, the initial downside is supported by 1570, which is a cluster of the moving averages and also a pivot. Loss of 1570 could possibly open the way for a deeper retracement towards 1560, possibly even 1550 to the downside, depending how we draw this trend line, either by connecting the closing levels of the candles or using the wicks. But there's a range of about $10 of support there. But overall, a key level to watch is at 1590. Lastly, let's talk about crude oil. Crude oil was under pressure for quite some time. Possible indication, a lack of global demand for crude as a result of virus in China. OPEC was meeting last week. This potentially looks like a double bottom formation in intraday timeframes. As long as this current support holds around 51.60 and we see a gradual move higher, that could open the way for a potentially retracement to the upside, targeting 1540, 53.40, 54, possibly even 56.24, and that level is actually quite significant, because if we take the fib retracement from the current swing high here, all the way down to these lows of February, then that 53.40 is our 23% retracement, and then we have a cluster of 38 and then 50% fib retracement, very close to this 56.20, 57 area and so on. The other alternative would be if we see a corrective move lower, so then this would change very quickly, and it will become something that looks like this, like a rising wedge or a sideways consolidation that failed, or this one here that failed. And so if we see a dip lower, and in particular if we see the end of day close below 50.50, retest of that level from underneath, that would change the outlook to bearish, or basically it will further confirm the bearish scenario, potentially opening the way for an extension to the downside, targeting 48.80, 47.70. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.